Thursday, June 15th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 8:45 a.m. London. This is an update, early market update, and also I want to talk a bit about the market's reaction to the Fed's decision. They did raise interest rates, and then we had the press conference, Janet Yellen, which I listened to almost all of it, but here's I was listening to it on my Bloomberg.com, and I have to say it's like listening to a witch or a magician or something, and the questions that were asked to her, were not really hard questions. They never are. I guess the reporters that were there, if they do ask hard questions, they won't be back for the next press conference. But one question I would ask her is, how can we have almost full employment in the U.S. when over 100 million people are out of the labor force? And how can they keep watching this 4%, 4.3% at the moment, I think, or 4.4% unemployment rate? And the other thing I would say, how can you say that wages cause inflation? Aren't wages the consequence of inflation? Inflation is the printing of money that you've done for the last 10 years, the Federal Reserve, all this credit that you induced through zero interest rates, through QE. That's what I would ask her. But for the market and for the people who follow this rubbish, the fact that she raised rates and she didn't become more dovish, despite the weak numbers we saw yesterday in CPI and retail sales. For the market, that was disappointing, and a lot of people were asking, how can you, keep the same forecast or projection of rates if, CPI, or what they call inflation, is under 2%. It was, 1.7 core CPI, and she said, well, this is just temporary. And the thing is, the macro surprise index and the S&P right now are diverging massively. So anyway, the take from the market is that they're going to probably do another hike this year, and then 3 or 4 next year, and that they're going to start unwinding their balance sheet. And the way they're going to do that is by not rolling over maturing securities, treasuries and mortgage backs, or agencies as they call them. They're going to unwind a lot more treasuries supposedly than agency debt. It's just really, really funny watching this. It looks like she's in a completely different world. She's not in the real world, but that's the Fed. Anyway, this morning, before I talk about the market's reaction yesterday, this morning gold is at 1261.60, up half a cent. That's from the 5 p.m. Closing on COMEX, after hours, because I think it closed a lot higher, the 1:30 close. Silver is 16.90, unchanged from the 5 p.m. Project A close. So the high has been 17.10 overnight and 16.85. Gold, the high overnight has been 12.66.80, and the low has been 12.59.50. The stock market, though, is under pressure this morning. Well, in terms of percentages, not that much. The Dow futures is down 62, or just under 1/3% at 21,309. S&P, though, it's at 2427, down almost 11 points and almost 0.5%. The NASDAQ 100 futures is down 52 points, or 0.9%. Seeing the FTSE down 65, 0.87%. The dollar is kind of strengthened against the pound and also the euro. Pound is now 127.30, down 20 pips. Euro 111.89, down 28 pips. Dollar is unchanged against the yen, but it did rally from the lows below 109. I was talking about that 109.11 level yesterday, but it has rebounded. So the dollar has kind of rebounded after this FOMC decision to hike, and their forward guidance as well, or their projections, have helped the dollar for now. And I also noticed, well, actually now I want to talk about gold and silver's reaction to the FOMC, to the rate hike and the press conference and Yellen's comments. I made a video and I put it up in the, in the eye above, in the cards above, a few days ago, I think, about how in the last, the last rate hikes the Fed has made, December 2015, December 2016, March this year. I made a video how gold actually bottomed on those exact days, made a bottom. And then from there on, it started rallying. And then how it, a few weeks prior or months prior to the, a few weeks prior to the expected rate hike, how the gold price corrected down. But yeah, and I made a video about that. And interestingly, yesterday, and I'll bring up the gold chart here, you can see FOMC, Fed bottom, question mark. Yesterday was interesting because the day before yesterday, we made a low around 12.59. And yesterday, after the Fed decision, immediately after 2 p.m. New York, gold actually traded back up to 12.80. It was trading around 12, I think, 12.66, 67 prior to the decision. And market rallied quite strongly. The low, actually, no, it was around 12.72, 75. That's not really important where it was trading, but the fact that it went to 12.80, and then after the, excuse me, the press conference started later on when, Yellen was talking, the gold price dropped, corrected way back down, and actually broke the low from the previous day. We touched 12.57. So there you go, right on cue. We made a low in gold on the Fed FOMC day, June 14th. So it will be interesting to see if that will hold as a bottom. That's a key level now, 12.57, in my opinion. Silver as well yesterday rallied quite strongly. We got up to 17.38, but after the press conference started, it just fizzled out. That rally went below 17, and the overnight we've been at 16.85. So I guess we just need to get back above 17. The gold rallied yesterday, and silver on the back of those weak numbers. As I said in my video yesterday, gold and silver rally after weak CPI retail sales data. They traded a little higher after the FOMC decision, but then fizzled out after the press conference. So that's the situation. Precious metals, of course, I still believe in precious metals long term. It's the only really insurance against monetary ineptitude, so to speak. And it's been for thousands of years. Cryptocurrencies are very interesting, and they are an alternative to the fiat money system, but their track record is not, it's not even 10 years old. So even though I am involved in cryptocurrencies, I would be, I wouldn't put all my eggs in one basket. I wouldn't bet the house on it. I know a lot of people are kicking themselves. They're saying, oh, I should have bought, loads of Bitcoin when it was trading at $3. But, The thing about markets is there's always going to be other opportunities. There's always opportunities out there. You just have to keep an eye out for them. Well, this morning cryptocurrencies are weaker. Bitcoin is at 2,400. And it got down to a low of 2,200 in the last 24 hours. So I think we saw the champagne and cigar top in Bitcoin at around 3,000. Loads of people were celebrating, and then the market just turns, And I said that, it's getting a bit frothy. So Ethereum 333, the low 24-hour is 292. And let's have a look at Steam. Steam is, back below 2. It's at 196. So it's had a 209 to 171 range. It seems like it's doing badly, but a few weeks ago it was below 1. So let's not forget that about Steam. So, my take on the Fed is that, they're just trying to manage the markets, the financial markets, keep asset prices, elevated, try to, or seem to be trying to, how can I say, unwind their balance sheet, but they'll keep an eye as well. It's all conditional. She comes out and says, yeah, we're going to be doing that unless something happens, you see. So it's not all etched in stone. The other interesting thing about the Fed, and it was actually from one of the reporters on, one of the analysts on Bloomberg TV, which I watched online, and actually someone there said something interesting, that next year, her position as Fed chair is up for grabs. That's her last year. And there's another 3 or 4, or up to, 3 or 4 board of governors seats that have to be filled in. I think there's a Fed president, from one of the regional banks that has to be filled in as well next year. So we could have a completely different Federal Reserve and FOMC next year. So all these forecasts and projections could be for naught. That's what I would keep in mind. So if you enjoyed this video, please give me a thumbs up, share it far and wide. If you like to get updates when I do my videos, subscribe to the channel if you haven't yet, and also watch me on steemit.com, steemit.com. That's it. I'll talk to you later. Bye.